We want to welcome everybody to tonight's call.
Well, you all are the experts, and we are the trainees. So we look forward to whatever you guys offer. Well, correction, everything you guys offer.
Well, Steve, let's do a little wordsmithing here on expert. X is a has-been, and a spurt is a drip under pressure. So I qualify.
That's a nice way to put it.
That's a very good way to put it.
Yeah.
We get comedy and music on this platform. Hi, everybody.
Hello, Miss Laura.
Hi there, Miss Laura.
Hello.
Hello, Miss.
Hello.
I want to start off by saying this. You know, a lot of us are presented. Hello, True Love.
Hello, Johnny B.
A lot of us are presented with all kinds of different opportunities, especially in the cryptocurrency world. Oh, we got this project, and this is going to be the new best thing. But I'll be honest with you, when we look at the commodities market, something that's been around a long time, stable, predictable, to a degree, risky, rewarding. You know, we can play in a lot of different arenas, but this is one that's proven itself
Yes, you should.
over and over and over again. Let's mute some mics out here. Anyway, so the purpose of this call is to try to provide some training so that you can participate in it, minimizing the risk and maximizing your gains. So with that being said, I want to turn over the call to Barbara, and let's do our normal thing.
Okay. There we go. So, welcome to our Futures and Commodities one-on-one training. This lesson can be found, tonight's lesson can be found in lesson 2 in the Manual Futures and Commodities one-on-one. So here's our disclaimer. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
Thank you very much.
You're welcome.
We had a quiz this week, correct?
Yes, that is. The first quiz, let's see, is Miss Dora on? She usually does it for Dr. Mel, but she's not, so I'll do them tonight. First one is, what is the golden rule? A, always trade with a stop loss. B, make sure you follow the rules. C, do not risk more than 10% of your account on any particular trade. D, control your emotions. E, all of the above. F, none of the above. G, not sure. Who knows the answer?
Barbara, read them again, please.
What is the golden rule? A, always trade with a stop loss. B, make sure you follow the rules. C, Do not risk more than 10% of your account on any particular trade. D, control your emotions. E, all of the above. F, none of the above. G, not sure.
Never risk more than 10%.
Never, Miss Gwen says never risk more than 10%. Lorenzo says D, control your emotions.
Stop loss is always a golden rule as well. Never risk more than 10% was my answer.
All right. Don't risk, Miss Johnny. What do you say?
I say never risk more than 10% on any one on any one trade.
All right. That's it. We do got another quiz. Which of the following are rules that we follow when it comes to trading? A, don't follow the trend. B, never use a stop loss. C, don't have a plan. D, have a system. E, go to Disney World. F, not sure. G, none of the above. And H, all of the above.
D.
D, have a system. Mike says D. Anybody disagree?
Unless you're dealing in sugar, then you can go to Disney World.
I know that's right. All
I can promise you, I would never, ever, 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 ever go on a trip and leave your thing behind with an open trade. I've done that too. Nothing's worse than sitting at the bitter end in Virgin Gorda on a sailboat watching your trade disappear.
Oh, that's bad.
Yeah. Now I know Delvin goes to Disney World, but
Yeah, he actually went for real too. That's a true
yep.
story. Y'all
And
hear him tell it. Yes.
I actually was sitting at the bitter end in Virgin Gorda.
Yeah.
That is a true story too. But all right,
All right.
so we're good to go on that part.
Yes.
So we have a lot to do tonight. We will go ahead, Barbara. You want to say our special thanks?
Yes, so we give special thanks to the CME group um, for the videos that you guys will see, and the education has been provided by CME Group Incorporated, and we know about the CME Group. Also, barchart.com for their website and their education. Barchart is a leading provider for real-time stock and commodities data. So thank you.
If you are on RFD TV and watch the reports during the week on the 20th, on the 20 at the 20 and 40-minute mark every day, all those quotes are always done by bar charts.
Awesome.
All right. Why don't we get this show on the road?
All right.
Got a question about the book that you got up there on the screen.
Oh, yes.
Does anybody know where you can get it? Amazon, unless you want to pay $35 shipping, it didn't come sometime between January the 8th and January the 29th.
Try Barnes and Nobles.
Barnes and Noble.
I tried Barnes and Nobles. They don't have the book here in Waco.
You can't order it online at Barnes and Nobles?
Yeah, but it's about the same, I think. I can get a Kindle book right away, but I don't have Kindle.
It's at Walmart too. They have it at Walmart. You can order it almost anywhere where books are sold. I know Walmart has it, and sometimes they have it on sale at Walmart too.
Okay, well, I'll try
You may wanna
Walmart,
try
but
that.
yeah, I figured Amazon would be the one that have it the cheapest, but
Why
Yeah.
is it such on for shipping?
I don't know. I don't work at Amazon. I'm telling you, the book is $55.96 shipping $1.06, I get it somewhere between January the 8th and Thursday, January the 29th. If I want to pay $32.77, I get it somewhere between December the 22nd and December the 24th.
Not
That's
sure.
on Amazon.
Yeah, not sure. I've never heard anybody else say that about Amazon.
Well, maybe it's because it's Christmas. I don't know, but
You
that
know what that
seems
could be. That
that
that could have
It
that's
might
something to
be
do
the
with it.
holiday.
Yeah.
It might be
that's
the
kind
Try
of.
holiday.
Walmart. Try Walmart then.
I'll do that.
Yeah. Try
But they got drones flying out of Amazon now here in Waco, so that shipping couldn't be that much.
it. Yeah, no. Shouldn't be.
They're delivering stuff with drones now.
Okay. All right.
I'll
Well,
try Walmart.
this is our book that we that came out last year that we recommend everyone get. It is a book put together to teach everyone how to trade in the futures and commodities market. It simplifies things for you, breaks it down, makes it really easy, and it goes into alignment with the course that Delvin teaches that you're on tonight to learn. So all of that is in this book. It's beginner friendly. Even if you are have some type of advancement, it still will help you as well. So we recommend everyone get that. And if you get it, please go back and leave a review for us as well. It does help. All right, and this is our event. Every year, Delvin puts together a travel and trade retreat. So this one is 2026, April 30th through May 2nd. Tickets are on sale now, well, for sale rather, and we do have a payment plan for the ticket portion. So we do have a confirmed industry professional that's coming. It's a surprise. We're not going to tell you who, but they have confirmed. So this year is going to be different from any other year that we have had this. And every year I recommend people to come. It's always good to be in person, and it really helps you to ask questions with other people, and you get to learn things that Delvin and Mr. Johnny and Mr. Eric don't disclose on the Sunday night call too. So we all get to do that, and it's things that you can immediately start doing once you get back home. So I find it very necessary to attend every year. So I recommend you guys to attend. Just visit our website at futuresandcommodities101.com and get registered on the events page there. You won't make a mistake by coming out. I will tell you that. So, and we do have a video to show you guys about the retreat. So let me pull that up for you guys and show that video.
I would love just to recap and just get some feedback, get some testimonies, feedback of how the experience of the first travel and trade workshop retreat went, and just to check the pulse. Let's get the energy from the event, man, and start the call that way. All right with you?
Yes, sir. Absolutely. Thank you for letting me be part of the decision making.
Absolutely, man. So with that being said, I just want to start out by saying, what happened this weekend, I had no idea how it was going to turn out, but I did. I did have the faith that it was going to work out. Everything was going to be good. But to what extent, it was way beyond what I expected from everything, not just the actual presentation of the retreat, but seeing all the bonding that took place, all the relationships that were formed, on top of everybody having aha moments and getting that understanding, Johnny B, that we've been trying to bring across. Seeing so many people saying and having moments where they saying things started to click and make sense. That was real powerful, man. And just seeing that, I think having a retreat was probably the best decision that could have been made when I was trying to figure out where and when and how, but not really, 100% sure about it because I had never did one before. So just wanted to make sure I got my feet wet, wet as well. So it was me learning at the same time how to do an event, a function of that caliber. So, man, I had my moments, but I would love to hear from those who came out to the event, and I'm sure others would like to hear it too.
Hey, Dalvin, I just want to say that everything you said had so much wisdom. Like I wrote a ton of notes, just like Rosa. I feel like I can just look at charts and just read them. I can see the formations, and I feel like that's a skill and I will be able to take and create my business for the rest of my life. And I am so thrilled. I feel really confident about commodities. You went from the very beginning, from the 1700s. You laid out all the rules. So as you were laying out each rule, as we went through 1, 2, 3 at a time, I felt more secure in becoming a commodity speculator, because you were able to get the structure, the foundation, the ceiling, the resistance. I was like, I got this little success. What would you call it? System on how to be successful and how to bring patience and discipline, and the rules are just phenomenal. So I just want to say thank you so much.
How to read the charts.
And how to read the charts. I'm walking away. I have no doubt I can read a chart, and that's huge. So I just want to say thank you. I learned everything in one day. I've been a lurker. This is what they call, I just always pay attention and listen and everything. But yesterday I learned everything about commodities, and I'm so grateful. Thank you.
But Tanya, I want to say, we had some time today. You wanted to pull me to the side, sit down, and get to one-on-one, have some Q&A, personal training, and just go over some charts today. And seeing you be able to identify the formations that we watch on the chart, and you are just starting out with this.
Yesterday was day one.
And you sat down and showed me multiple charts today, and pointed out the formations exactly. Even told me where you would enter the market at correctly. I was like, "You sure you just started this yesterday?" So it was amazing seeing that today. Thank you for pulling me to the side.
I listened to you. I listened to every sentence you spoke yesterday, and I wrote it down. I listened, and then and I'm filled with joy because I can read charts. So I can't wait to learn more. I can't wait to do the next class, the next retreat, the next level 2, wherever we're going. I'm going to go with you.
Me too.
But thank you again.
Fantastic.
Thank you again. Because I've already shared with everyone. You were the first one to start getting on me about teaching this. Several years ago when we met in a company that we were part of, you was on me, and I was running from it, man. So, it's been a blessing for me as well, not just the people who are learning the information. So you don't know, that was the beginning of this. So I appreciate you, Tanya.
Yeah, I appreciate you too, and you're natural at it, very natural. You over deliver. It's more value than you could ever imagine, and we had fun. And we created relationships, and it's so exciting. I'm glad to be a part of it. So thank you so much. And I just want to say that also to Johnny B. This is my first time I think met him, and that explanation about the Southwest Airlines, that was golden. So thank you. It kind of clicked.
Yes.
I guess you were able to relate to that for being that. What do you do for a living?
I'm a flight attendant for United Airlines. This is my other job. I was looking for something that I could do that was on my own time and my own business. And this is it. I'm just thrilled. So I could relate to the Southwest example for sure. Now I understand commodities and futures very much. I understand. Buying gas for the future, right? Yes.
Thank you so much.
You're welcome.
Outstanding. Thank you.
Yes, yes, yes. So let me pull up the presentation. If anybody, let me just tell you, Miss Tanya was just like us a few years ago. Flight attendant, didn't know anything about trading. And if you noticed back in our group a few months ago, she put a picture in there where she went to the New York Trading Exchange and she rang the bell there. So that was her, this person from the video. So this is what happens. This is, you know, a product of her being a part of our trading group. And Delvin has a 7-figure earner now in our trading group that didn't know anything about trading until they got with him. That's the blessing of getting with a mentor and going to these retreats. It actually produces good fruit if you allow it to. So just for anybody that was wondering, I'm not sure if I can do this, you can do this. All right, Mr. Johnny, take it away. It's all yours.
All right, let's get to the meat of the subject. When people and companies come to the futures exchange to buy, sell, and finance products, what they're really trying to do is remove risk from their own business, or make money as an investor. When the prices fluctuate, the bottom line, they don't know the future. Nobody knows the future, but derivatives like the futures and options can help you protect their goals, and even if prices move the wrong direction. Okay. Commodity considered, commodity is considered a necessity, a product approved and designated for trading or clearing in accordance with the rules of the exchange. Also may refer to it as a physical commodity. Okay.
Being smart, you're thinking, but the world doesn't operate on some fantastic global comic book-based economy. And alas, you're right. The world economy is based on all sorts of things that are bought and sold every day. From agricultural crops and livestock to metals and natural resources to stock indexes to interest rates and foreign currencies. It truly is a global marketplace. Buyers and sellers do more than buy and sell commodities and financial products. These traders come to our exchange to remove risk for their business or to make money as an investor when prices fluctuate. When you trade large amounts of anything in today's world, uncertainty and risk are the enemy. And protecting yourself from risk all comes down to speed and timing. What does risk really look like? Well, let's start back on our supply and demand diagram. In the middle of supply and demand is a meeting point where the price for a product is set. But prices, whether for corn or crude oil or even dollars, move all the time, from month to month or even from second to second. So the price of what you buy or sell today could be higher tomorrow, or it could be worth less. But there is a way for a trader to absolutely know that future price by putting it into a binding contract with another trader. They're called futures and options on futures. Agreements between two traders to buy or sell an amount of something at a future date. A buyer of a futures contract can lock in the price of an item for delivery at a future date. But before that item actually shows up at your doorstep, you can sell your contract to another buyer. In fact, most futures contracts are sold long before the potential delivery date. Only someone with a need for the product would take delivery of the final contract. If buyers aren't sure they want a futures contract, they can buy an option, which guarantees their right to purchase a futures contract at a fixed price. So, they're not obligated to buy the futures contract, but they do have the option. That way, if market prices rise or fall between today and some point in the future, traders can exercise their option and avoid a risk, and potentially profit from the change in price. With either futures or options on futures, the buyer gets a safety net in case prices move in the wrong direction.
Hope everybody understood that. So there are different types of traders, all right? Commercial traders, this trader helps a business make better decisions. Let's just say it's an airline, and this you heard in the video earlier about Southwest Airlines. Let's say it's an airline that comes to the market to hedge its fuel prices. As a result, the airlines can fly more flights, serve more customers, because it's better able to predict and manage its fuel costs. A while back, the price of fuel went out of sight, and Southwest Airlines bought a whole bunch of futures contracts at a lower price when the price was low. So whenever the price went up, they remained profitable because they had already locked in their price at a lower price. Okay. Next slide. Commodity Trading Advisors, the CTA, is a trader working on as a part of a hedge fund. Okay, and these funds are big traders, right? Oops. And they hedge the hedge funds. They want to use the futures and options to grow its portfolio and make money for investors through volatility. They take on risk, and that way they make more profit at the end. Next. So the futures commission merchant is the industry term for the futures broker's license. So everybody has to be licensed to operate in this market. All right. Now we have an electronic market maker now. See, used to be everything was traded on the floor by brokers. The electronic market makers develop complex algorithms and computer models to enable the traders to trade derivatives and then display its buy and sell prices to other traders. And this company adds speed, transparency, liquidity to the entire market and may help customers get their trades done more quickly and at a more competitive price. Asset managers, oh goodness. This trader can come from any kind of organizations. For example, a university has someone on its staff that protects the value of its endowment. The people come, these are people that trade for you. The person comes to the market to help meet the university's investment goals so it can put more money towards grants, whatever they use their money for. All right. So in other words, The big firms have, traders, and then the profits they make can be used. In other words, they're doing it for profit. The priority traders, or proprietary traders, trade. He's a speculator who trades a position or multiple positions in a market as an investment base on his view on how the market will perform in the future. This trader plays a critical role in the function of the overall market. Why? Because they provide liquidity.
So who are these smart, attractive people who come to buy and sell futures and options contracts? They could work for banks, corporations, governments. They could be livestock ranchers, investment managers, construction planners, farmers, food manufacturers, really just about anyone in the world who wants to manage the risk of fluctuating prices. But it all comes down to two kinds of trading: hedging and speculating. Now, these two go hand in hand. If you took one away, there would simply be no market. That's because you need both sides to balance risk. On this side of the trade is our hedger. He buys and sells futures and options contracts in order to protect himself from price swings in the future. By locking in a future price, he makes his costs and his profits more predictable. Put simply, he trades to drive risk out of his business. But this risk doesn't just disappear into thin air. It's actually being transferred to our speculator. A speculator isn't really interested in owning the product being traded, but he is interested in trading the contracts for those products. Think of it like investing, buying and selling contracts in order to make a profit when prices move. To do that, a speculator has to do some very technical math to decide if the risk is worth it. And when the price changes work out in his favor, he makes the trade and makes a profit. So, hedging transfers risk, speculating absorbs that risk. It takes both types of trading to bring balance to the market and keep trades flowing back and forth.
Folks, that was a very important little video. Okay? And if you can understand that, you can understand what we're trying to do. I have a cow-calf operation or a cattle operation. I get, based on my calf production, I get one check a year. Because that cow is going to have one calf. And when that calf gets of age and weight, I sell it. Well, guess what? I don't know what day that it's going to be. And I don't know what price it's going to bring. Okay? But I've got a certain amount of obligation that I got to make to the bank for the loan that loaned me the money for the cows, or for the feed that I got to buy, or whatever. So if the price of feeder cattle get at a certain price, where I can lock in my profit, I can sell those calves for future delivery at a certain price and lock that price in. Does everybody understand what that means? So I'm hedging my crop at a price where I can lock in my price. Now, that takes my risk out of it. But the speculator who is just doing it to make money, he's going to bet or absorb that risk by figuring out whether the market's going to go up or down. So what does the small speculator bring to the market? Okay. He brings lower risk to the commercial guy, but more liquidity.
Here's another really key concept in the world of futures and options trading. When a contract is sold and a trader makes money, ideally, that's when a trade is said to be liquidated. The more trading there is in a particular market, the easier it is to find someone who's buying what you're selling. That's liquidity. Let's say you've got this very risky position in the market that you want to exchange for a less risky position. Well, without enough liquidity in the market and someone to trade with, you're in a rather confined space. But when there are other contracts to buy and sell, you've got a much better chance to find a willing partner and shift your risk. And when you have a market that's really active, full of participants and contracts being bought and sold, you have a much better chance to find a willing partner to absorb your risk. Or, if you're a speculator, a better chance to profit from taking on someone else's risk.
Okay, the commodities market is highly regulated. Highly regulated. All right. And the agency that's responsible for that is the Commodities Futures Trading Commissions, CFTC. You're going to hear that. We're going to ask you that question. You're going to know this. If you go to their website, you can read all about the regulations and the CFTC. They're responsible for protecting market participants from fraud, manipulation, based or market abuse, and ensure financial integrity of the exchange. Next. But remember this organization.
This is a short quiz that we have for you guys. You're going to mute yourself and participate. We want you to, for you to determine which one is a hedger and a speculator. So it's about 6 or 7 questions.
Okay, a homeowner buys a home with hopes to sell it when the market exceeds the original price. Would he be a hedger or a speculator? Come on, folks.
I know somebody know it based off of the information you've seen about hedging and speculating. Which one would the homeowner be? Unmute yourselves and somebody give us the answer.
Yeah, if a homeowner buys a home with the hopes of selling it when the market price exceeds the original price, would he be a speculator or a hedger?
Hedger.
Hedger.
Outstanding. All right. The homeowner is a speculator. Oh, she.
Oh.
I don't want to comment on that.
I knew that was going to get somebody.
She's expecting the real estate market. She's accepting the real estate market risk in exchange for the opportunity to profit. And the poor guy that married her is out on the street. Next question.
Oh shoot.
Yeah, I know I'm going to get for that. The retirement fund manager contributes to a shared pool of investments in hopes to add value to the client's profit. Is he a hedger or a speculator?
Hedger.
Speculator.
Yeah, that's
The retirement fund is a speculator. He also's just working the market for the fund, trying to raise money for the fund. Next question. The chocolate maker. He locks in next year's cocoa supplies in case extreme weather decreases the cocoa crop. Is he a hedger or a speculator?
Hedger.
it's gotta be hedge.
There you go. There you go. The chocolate maker's a hedging. He's hedging. Whatever happens to next year's cocoa crop doesn't matter. He's already got his price locked in. Next. The chain store. All right. He sets up shop in a new place so that he increases profits, so that increased profits will exceed operating costs.
Speculator.
Speculator. I say speculator.
Let's get some good answers in here. We've got both.
Hedger.
He's a hedger. Did I also hear speculator?
Speculator, I think.
Speculator.
Speculator.
All right. He's a speculator. The company's putting down capital and resources with the intent to profit off its investment. Next question. Steel distributor orders large inventory of hot rolled coils so that they paid for and ready when production spikes.
Hedger.
Hedger. He's holding his profit. Hedger. Yep.
Hedger.
All right, we got hedgers. And that's what he's doing. Outstanding. Next question. The stock trader. He buys a piece of company and with the intent to sell it when the company prices increase.
Speculator.
Speculator.
Hedger.
Okay, Mike,
Speculator.
you're the dissenter, okay? All right, let's go. He's a speculator.
Whoops.
Whoops. All right, next. Car collector purchases insurance on his collection to protect himself from damage or theft. Ooh, it got quiet.
Maybe hedger. He's protecting himself from future issues. Yeah, I'll take a hedger.
Yeah, we got a hedger. Anybody else?
Hedger.
All right, let's look for the answer. The car collector is hedging his. Absolutely. See the results. All right. I hope everybody understands the difference between speculating and hedging. So, does anybody have any questions?